All right, let's get serious for a minute. If you're tired of guessing where the market is going and you're looking for a data-backed, systematic way to trade, you are in the right place. Today, I'm pulling back the curtain on a 100% automated strategy I've developed called the FVG breakout. We aren't just looking at pretty patterns here. We are looking at hard math, market structure, and pure performance. Now, before we even talk about how this thing works, let's look at what it actually does. Because at the end of the day, results are the only thing that matters. Take a look at this equity curve on the screen. This isn't some get-rich-quick fluke. This is a steady, professional climb. We are looking at over $56,000 in net profit with a massive 73.54% win rate across 771 trades. Even more impressive is the profit factor of 1.892 and a max drawdown of only 0.03%. Those numbers prove one thing. When you combine the right filters with precise execution, the market becomes a much more predictable environment. So, how does the brain of this strategy actually think? It is built on three unbreakable pillars. First, we have the opening range. Every day at the New York Open, the algorithm draws a box based on the high and low of those first 5 minutes. This is our field of play, and we don't touch a thing inside it. We are strictly waiting for a breakout. But we don't just trade any breakout. We use a trend filter, the 200-period EMA, as our compass. If the price is above it, we are only looking for longs. If it is below, we only want shorts. Simple, right? But the secret sauce is the FVG. A simple breakout isn't enough because that is how you get trapped. To enter, the algorithm requires an FVG to form during that breakout. This confirms there is real institutional momentum pushing the price out of the range. Let's look at two live examples so you can see this in action. On the screen, check out this long setup. You see the blue opening range box and the price trending above that yellow EMA line. The moment the price breaks above the green resistance line, a green FVG box is formed. The algorithm sees that institutional push, enters long, and immediately sets a trailing stop based on the ATR. Now, look at this short trade. The price is clearly below our yellow EMA, and it breaks the red support line of our opening range. Notice that red FVG box appearing as the price drops? That is the signal. The algorithm enters short and manages the trade down, locking in profit as the price moves in our favor. And look, we don't use fixed stop losses here because the market is a living thing. We use the ATR. The algorithm calculates the current volatility and places your initial stop and your trailing stop accordingly. If the market gets crazy, your stop moves. If it is quiet, your stop stays tight. At the end of the day, trading isn't about being right. It is about having an edge and the discipline to follow it. The FVG breakout gives you that edge by combining institutional logic with automated precision. Stop trading with your heart and start trading with a system.